In today's video, I will build a strategy that goes from $10,000 to above $2 million. Now, this is not extremely overfit strategy. In fact, I'm just matching the style of the strategy to the characteristics of the instrument. Now, the reason I'm doing this video is because a recent trend on YouTube for the past 2 years, some channels are blowing up, basically getting hundreds of thousands of subscribers and views by posting crappy that adds no value. In fact, if anything, it spoils your knowledge and information. What those channels are doing is basically taking any strategy they read or they look it up on the internet, and then they go and test for 100 trades. Now, why 100 trades? I'm sure one channel did a video with 100 trades. That video got, I don't know, 1 million views, and then everybody just follows through, because that's usually how the trend works on YouTube. And they all use TradingView because it's eye candy for charting. They change the colors, and sometimes they go from moving average of 20, make sure to change it to 21, because that's what's gonna make the strategy work. And then they tested for 100 trades. Bear in mind, those 100 trades sometimes are in 1 month and sometimes in 10 years. Now, I get it. Some of you, maybe the fans of the other channels, will say, but Ali, you are just jealous because these channels have, I don't know, 500,000 subscribers, millions of views, and you are just barely 4,000 subscribers and not even 1 million views. And my answer to those people is, you are totally right. I am extremely jealous. I'm putting all this knowledge. So yes, I am jealous, but still I am teaching you the right way to test strategies. So I picked a channel today because this guy did a review of another strategy that was posted somewhere else. So he reviewed that strategy, and now I'm reviewing his strategy. The difference, of course, is I'm doing everything with programming, so there is no subjectivity, while he is doing it manually. And plus, he's doing only 100 trades. I'm going to do all available trades. So let's watch what he's trying to do.
So let's get into the strategy. It's actually one of the strategies presented by these guys over at Trading Strategy Guides. Last time I tested one of their strategies, it was actually one of the worst strategies that I had ever tested on the channel. This time, it is now the #1 strategy. So it seems as though not everything they're putting out there is all that bad.
So just like you heard, he tested some strategies of these other guys before. They were crap, but now he tested this one, and it looks amazing. In fact, it is the best performing strategy that this guy tested. And this is his Excel sheet. He even tell you, like, look at this. This is 40 days to get 100 trades. And this is 11 years. This is 6 months. And this is 16 years. This is 4 days. I mean, I can't even continue. So he is basing the score by testing a strategy for 4 days. Okay, with 16 years. So for, I'm sure you're enjoying this, the regular viewers, but for noobs, for new traders, you cannot do this, because the strategy in the last 4 days might be in a bull market, might be 4 high volatility up bars, and then the last 16 years, probably it was doing nothing. Okay, so you cannot just pick a certain section and say, oh, this strategy good here, let me trade it now for the next 10 years because it's going to be good again. So that's a fallacy. You cannot do this. So this 100 trades should be on equal periods, at least. Okay, pick 2 years, but then you pick 2 years for everybody. But you cannot equate 4 days with 16 years. That's just bull BS. So he picked the strategy to trade on Tesla 1 hour chart. This is really good. I mean, he doesn't know it, but this is a good concept by matching the style of the strategy to the instrument. For example, we know the indexes are mean reverting. So it makes sense to build mean reverting strategies on mean reverting instruments. And then it makes sense to build trend following strategies on trend following instruments. Now, Tesla is a trend following instrument. The problem with that is Tesla started trading in 2010. So we wouldn't know that Tesla is a trend following instrument until probably 2017. So we will need to wait for 5 to 7 years to gauge if this instrument has a tendency to mean revert or to trend follow or just to sit in the middle. So that's fallacy number 2, that he is picking a trend following strategy on Tesla since the beginning, of course, because in 2010 you wouldn't know that this strategy will work, as this is a trend following strategy. Okay, so the rules for this strategy to go long is the ADX of 14 periods need to be above 30. And then the 20 exponential moving average, we wait for the price. Let me zoom in here. This is a trade. So we wait for the price to touch the 20 EMA while the ADX is above 30. Then we will go long above the high of this bar that touch the EMA. And then we will exit by a stop loss below this low or by the EMA trailing when the EMA breaks the high of this bar. So I made it simpler because, I put another EMA, which is 25 period, and we will just use that to trail all the time. Instead of having a stop loss here and a trailing here, we will just use this, and I test both of them. They are extremely, extremely close in performance. But of course, this is a lot simpler to implement. So this is the trade. So this one touches the bar, and then we take the high, we go long, and once the price breaks the 25 EMA, we exit. Now, once we exit, same rules apply. The ADX here is above 30, and then this bar touches the EMA, closes above. So then we will buy at the high. So we enter here, and same thing, we are trailing with the 25 EMA, and this one goes here. So it opened below the EMA, and we exit. So now here is the difference when you are programming. If you are doing this manually, you would say, well, this bar touches it, and then we should go long here and maybe sell here. But because these are numbers, if I zoom in, you can see that even though it looks like it touches, but if I click on it, you can see the moving average is 99877, while the low of the bar is 99887. So in reality, it didn't touch. So that's why the trade didn't happen. And that's the difference when you program everything or when you doing it by hand. And here is how he is doing it by hand. You can see
will be just below the swing low of the lowest candle that touched the 20 period exponential moving average. The next step is to trail the stop at the 20 period exponential moving average, but only once the highs are taken out before the pullback had started that touched the 20 period exponential moving average.
So you can see he speeds up the video, and that's all the channels. So I'm not picking this channel on purpose. This just happens. I picked this video, but all these channels are doing the same thing. They explain what the strategy is. They play with the colors. They play with the settings, and then they do 100 trades just randomly, and they all do it manually. And just like I said, of course, they mess up most of the times. I've seen videos where literally the price hit their stop loss, but they consider that as a win. But of course, you can imagine the mistakes you can do by doing all of this manually. Of course, you will miss trades also, which I'm going to prove it to you because we will see the difference between his numbers and my numbers. By the way, he's also risking only 1% of the account on each trade. So that's based, of course, on the stop loss, which again adds more complication. But anyway, I did it exactly like he said, and we will see the result now.
This was tested on Tesla on the 1 hour time frame using a variable risk to reward ratio with a trailing stop loss method. And it did take 11 years of price data to find those 100 trade signals. So I believe this one took longer than any other 1 hour time frame test to achieve the 100 trades. So you're going to have, not very many trades to capture. Of course, we're not testing for time, we're testing for quality.
Looking for quality, really. So for new traders, you need to understand that stocks and indexes are extremely hard to build short strategies on. So once you gain some experience, you can build short strategies on indexes. On single stocks, you should just forget it. Shorts have a list. You cannot just go blindly short a stock. It has to be available to borrow. Number two, short stocks carry an interest. So let's say you made $100 on the trade, you still have to pay interest on the amount that you borrowed, even though you have the cash, but you borrowed that stock, so you pay high interest on it. Also, when market crashes or when any crisis happen, usually the exchange stop all shorts. Short has to be on an uptick. That means the stock has to go up and then you short it. If the stock is going down, you cannot short. And of course, there is the most famous short squeeze where, you might be short, making money. Suddenly a short squeeze happen. The broker says, give me my stocks back, the one you borrowed, and then you have to buy it back. And so short is a terrible, terrible idea on stocks. On indexes using futures and ETFs, it's doable. So we will forget the short part. So this is the short side, and of course you lose money as expected, 138 trades. And this is the long side, and we have 112 trades making 4,840. This is using 1% risk of the capital per trade. And you can see this is the curve, these are the drawdown, and you can see the number of shares variably change with the risk that we are taking. So all is good. I check the code. Excellent. Total analysis. On average, making $43 per trade. And of course, this doesn't match these numbers because, again, this is done manually and we are testing with code. So with code, there is no subjectivity. You cannot, the trade will happen if all the conditions are true, and it will not happen if the conditions are not true. But let's assume that I am totally wrong and these numbers are correct, and this is one of the best strategies ever. So the assumption is this is the best strategy. All what he did is correct, and 100 trades. In this case, this is all the available trades. Of course, it's not, because like you saw, there is about 100 long and 100 short. So we have almost 250 trades in total on Tesla using this strategy. And by risking 1% per trade, you're probably ending with $2,500 plus on a $10,000 account. So all this convoluted way to get this crappy return is nothing. So first of all, I taught you that 100 trades means nothing. In this case, it does mean something because that's all the data available. But even then, you cannot test since the beginning because you don't know that Tesla was suited for trend following strategies when Tesla launched. Now, instead, I will teach you a simple trend following strategy. This strategy is extremely simple. It's traded by billions of dollars by hedge funds with multiple variations of the strategy. I will teach you the simplest variation of this strategy. We will pick one simple moving average. When the simple moving average goes up, we will buy. When it turns down, we will sell. That's it. You cannot get any simpler than this. So this is the strategy. It's Tesla, 1 hour, same data. Now I have two moving averages. One is fast, which is 20 periods, and one is slow, which is 40 periods. So 20 periods is the green, 40 period is the red. And the idea is maybe we can go faster or go slower than the exit. So first we will test the short side. So we will do an optimization. We will pick the entry from 10 to 120, step 10, the exit from 10 to 120, step 10. So 144 combination for the short side. And let's sort by net profit, and you can see out of 144, only one is making money, which is going short when the 60 moving average turns down, and exiting when the 10 moving average goes up. And then all the rest are losing. So that's it. I'm going to drop the short, which I know it doesn't work. And now let's do the opposite. So 10 to 120, step 10, again 144 combinations. And let's sort. So this is very interesting now. The top strategy making $2 million. If you want to learn how to vet strategies for robustness the real way, then please subscribe to the waiting list for the Algo Trading Masterclass, where I have a full module only on robustness, because that's the important part of any strategy. With robustness, you have a probability of success that this strategy will make it in the future. The top strategy making $2 million and 144 making 81,000. So first thing we get is all iterations are profitable. What does this tell you? This tells you it doesn't matter what you pick, because Tesla characteristics has an edge in trend following strategies. So any trend following strategy long you build on Tesla should work. And this is the proof. You don't need to complicate things, put many indicators. I just pick a single indicator. Yes, I can enhance this a lot, but I just showing you the simplicity when you're trying to test a robust strategy. So like I told you, trend following works on many, many instruments. It needs to be in a portfolio. That's the drawback of trend following. So let me pick the top 34 here. So 740. So let me filter above 740. Net profit greater than 740. We are sorting now by the entry. Remember, out of 34 iterations, look at this, 20 of them are 10 and 40. So if I want to pick something in the middle, let me pick 20. And now let's see what 20. So 2010, 2020, 2040, 60, 110, 120. So I might as well pick 2020. So this is 2020. And we have 1.2 million from $10,000. So this is the same starting account as the other strategy, but instead of making $4,000, now we are making $1.2 million. And this is the strategy now, trading 20 and 20. So it is the green line. So now you can see that when the indicator turns up, we go long, and when it turns down, we exit. Turns up, we go long. Turns down, we exit. Again, here. And this is what we have. We have 880 trades, and strategy performance 1.2. This is what it looks like. I have this filter now, which is after 2017. So if I compile this now after 2017, still doing very well. Now we're making $172,000, and it's 402 trades. And again, you can see the number of shares is different because we are using the account value to buy the number of shares. This is 2017, and 22 is a losing year so far. So this is a great bit of knowledge to carry on with you as a trader. You see, each strategy style has a signature, and I put here the most common for trend following and mean reversion. So trend following, if you look at this x-axis is the profitability, you will see that the strategy has most of the trades in the middle, and they have what they call a fat tail. So the fat tail will be a lot further away, so a few of them, but making a lot of money, while all the rest are almost scratch or in the middle. And so this is the trend following signature. The mean reversion signature is the opposite. So again, you'll have most of the trades hugging the zero line in profitability, but then you will have the fat tail on the opposite side, meaning you will have more big losing trades. So you might say, well, how does that make money? And they make money with the win percent. So here is the win percent. So this is the 60 line win percent, 40 line win percent. So everything below 40 these are trend following strategies. So they have low win rate, usually below 40%, but they have big winners. And the mean reversion strategies, they're usually above 60% win rate. So they have a lot of win trades, but they have few losing trades, but they are big losers. While the trend following strategies, they have few winning trades, but they have big winners. So just from using the indicator, I can tell you what your win rate should be, and if you have outlier winning trades or outlier losing trades. Because let's say if you're using a moving average, then you are in the trend following category. And let's say if you're using an oscillator, then you are in the mean reversion category. And just from that, I can tell you, okay, your win rate should be above 60, and you will have many winning trades, but some big losers, and the opposite for trend following. That's why these two styles complement each other in a portfolio. So the takeaway of this video is, first of all, you need to learn to test the right way. I mean, even this testing that I showed you is not full. There is no robustness testing, but this is just another step. I mean, we should be taking baby steps here, because for the viewers that are watching these 100 trade channels, they're like, kindergarten. So we need to teach them, 1 + 1 = 2 before taking them to multiplication table, and then maybe doing calculus later on. So it's step by step. So step one, forget all these channels, what they teach you. It's total crap. It means nothing. There is zero value in these videos, because the 100 trades test means absolutely nothing. Like I showed you, if you test 6 days and 16 years, those are totally different. You have huge discrepancies in market regime. Markets could be up, could be volatile, could be down, could be quiet, could be crashing. You cannot just pick a month and test, or 2 years and test, and then say, well, now this strategy is the best. You go and trade it with your own money. The problem is, of course, new traders, beginners, usually just fall for this trap because it looks very nice, it's eye candy, and they don't know how to program, so they think it's a lot easier to test 100 trades manually, and they just go for it. Usually the cycle of these traders is they are in this wheel, they test a strategy, it looks good, they put money behind it, they lose, they go for another strategy, looks good, put money, lose, try a new indicator, and so on and so forth. Until at one point they either run out of money, lose interest in the market, or exit the hamster wheel. Once they exit the hamster wheel, hopefully they find somebody like me who can teach them the right way and to learn how to be a profitable trader. This is the normal journey of, I would say, 96 of traders out there. Unless you are one of the lucky ones who found a mentor from the beginning, and then you are not in the hamster wheel from the beginning. Those are very few and far in between, but most traders go through this journey. This channel is about educating you on how at least to find out if what you're seeing on YouTube is crap or means something, if it has value or not. This is not an attack against any other channel. Of course, I am saying all these videos are junk. They have no value. The 100 trades videos, but they have their audience, and good for them. They are making money on YouTube. But I'm just sorry that all these traders losing money because of these videos. In any case, if you find this video helpful, please give this video to those traders. If you have a group of traders, just post it there. Just give them a glimpse of what they can learn, or at least how to vet these crappy strategies, and at least not to put money behind them. Of course, as always, I'm open. If you have any questions, any comments, please post them below the video, and I'll be more than happy to answer you. I do read and answer all questions. And if you want to take this further, be a part of my inner circle, learn more, or have questions about these strategies, how to vet them, you are more than welcome to join the Discord through the link below. As always, good luck with your trading, good luck with your investing, stay safe, and I'll see you soon.